This Facebook Live session with me, Callum McLean, Special Effects Academy. What I'm going to do this week is, if I may, is I'm going to be your trading mindset mentor. So what I'm trying to do is I'm trying to show you tips and tricks that you can use in your trading that actually help your trading mindset. Because let's face it, not all of us know how, or not all of us want to work on our trading mindset. So that's what I want to do. I want to be your trading mindset mentor for the week and just show you the tips and tricks that we use to, thank you, Andres. I'm guessing that we can see the proper screen now. Hold on a minute. Just got a question. Where do I go to the event? I've not received any notifications. Go to our page and click on the link there. Okay, so sorry about that, just sending a message to someone so they can get in and view this. Okay, so today I want to talk about how I go about creating a trading system, because basically trading system has three parts. You've got an entry system, the trade management itself system, and then obviously your exit system. And then what we'll do is we're going to call that one system. So it's going to be one system, but it has three parts. It's got an entry, it's got a management, and it's got an exit. Now, the entry is not important as what we tend to make out it is, or what a lot of people think it is. It's actually the exit that's more important. But what we're going to do is we're going to focus on, people like to get good entries and they like to, to feel comfortable going into the trade. It's always nice if the trade starts off right and starts going into profit as soon as possible. So what I want to do today is I'm going to do a quickly, just go to the charts, find a couple of moves that we want to get into, and then go and see if we can find a way of entering, some sort of signal that's going to say, right now, this is how you're going to enter the trade. For the rest of the week, what we're going to do is tomorrow we're going to go down and we're sorry, getting hundreds of messages here. People are struggling to get on. I didn't realise. That's all right. Okay. You should be able to just click the picture. Andres, how did you find it? Everyone here is telling me they can't get on to the live. Surely you just click the picture, isn't it? Click the video. Sorry about this. Got someone trying to get on and they can't seem to change it. Right, anyway, let's continue. So, only Hayden can manage to do that.
Yeah, okay, so now I have to turn off the other, hang on.
Hold on, Hayden, can you jump out of Zoom and go onto Facebook?
Okay.
How on earth did you manage to get into here? I don't know how you do it. That's one of our clients, Hayden Knox there, just joining. I don't know how you got into the Zoom room. I didn't actually give anyone the link details. Obviously, he's an admin. Right, Ellie, so good. Ellie, give us a thumbs up and a like. Make sure that you're in now and I can hear you okay, or you can hear me okay. give me a thumbs up and a like, so I know you're okay. So what I was just saying is this week we're going to be looking at how I go about creating a trading system. And the trading system is an entry, a management, and an exit. Today we're going to be looking at the charts, and I'm going to show you, right, these are the moves we want to get into, and we're just looking for a way to get into that move. So thank you very much. Got a thumbs up. Anyone else, as you're joining, just let me know, just say hi, where you're from. And it's Eli, not Ellie. Sorry. My pronunciation, I do apologise. So let me make this a bit smaller and chuck it into the corner here. So I've just gone on to the 30 minutes charts, and it's just quickly having a quick look and thinking, right, now there's a move I'd like to get into. There's a move I'd like to get into. That's a very nice move I'd like to get into. That's a very nice move I'd like to get into. These are the type of moves you want to get into. If I can find a way of getting in somewhere around here and then taking the move all the way up to the top. So we've had a quick look then, and we think, right, there's some moves I want to get into. So what are we seeing beforehand? When the market comes up to a high, then it comes down, makes a low, makes another high, makes a low, makes another high, and then it makes a higher low. So what we're looking at here is you've got 1, 2, 3, 4, 5, 6, and go. So what this could be seen as is, let's do an annotate on here. Let me do some drawing. So we could say we got 1, 2, oh no, missed that. Let me get the rubber. Start again. All right, so we've got to move up 1, move down 2, move up 3, move down 4, move up 5, 6, and then 7. Now, for those of you who've already been doing trading, if you look, what do you notice there? What is it you're seeing? It's like an inverse head and shoulders. And so on the inverse head and shoulders, your entry is break of the neckline. Let's go and have a look at the other one and see if we can see something similar. So we get in this one. So what have we got here then? So it comes down 1, 2, 3, 4. No, that's not quite the 4, is it? Because that's not broken that high. So we'll be 1, 2, 3, 4, 5, 6, and then we're looking to enter. It's the same again. Let's just double check, make sure we're seeing the same thing. So we've got 1 makes the low, 2 makes a lower high, 3 makes a higher low. So this is the start of the retracement. This would be the 4, 5, 6, and then it goes. So again, we've got left tip, center, or the head, and then the right shoulder. So that, we're looking for your entry there. So as you can see, it's nothing, it's nothing mind-blowing or complicated. We're just looking to see if we can find something that happens time and time again that we can look to get into and make the move. So, and I'm showing you these as well because not all of these are very pretty. And so obviously the reason for that is most of the time trading isn't pretty. I know a lot of people out there, they'll show you all the perfect examples. And the trouble with that is it's very hard to replicate. So let's have a look. This one is quite a not so nice looking one. So it'll be 1, 2, 3, 4, 5, 6, and then looking for the move to go. So we've got your leg up back on the high. Remember, this is an uptrend. We've got the 50 above the 100, and this is pushing up, comes down, makes a higher low, but then makes a lower high. So now we know we're in a retracement. So what we're looking for now is to get back in. We want to get in and capture this move up. So we've got left shoulder, head, right shoulder, and your entry. Okay, so let's just have a quick look at this last one, see if we're seeing the same thing, and then we can start thinking about how we're going to actually turn this into our system. So, same again. You've got your one, left tip, center tip, right tip, and then entry. So we've had a look, and that's 4 examples, nearly one after the other, of it doing a head and shoulders before moving on. So the retracement causes a head and shoulders pattern, and then it moves on. So what we're trying to do is we want to come up with a set of rules that's going to allow us to get into this trade. And luckily for you, here's something I prepared earlier. And this is what called the trend tracer, because basically we are trading the trend. Now what we're doing is we're using the patterns in cyclicity to produce trading signals. And the pattern it uses is called a head and shoulders pattern. Now the trend trader is based on a trend-based system, so we're only trading with trend. And the trend is defined by the 50 and the 100 EMAs. You know, if you've never used a moving average before, let's quickly go back to the charts. These are the moving averages. So it's price, this is the 50 moving averages, so it's the price of the last 50 candles and the average of that price, and that's the 100. So when the 50 is above the 100, that's a good filter to tell us we're in an uptrend, because you can see that the moving averages are in a line. When we get a retracement, we know we're still in the uptrend because the 50 never actually crosses back below the 100. So even though this might have broken the 50, it's still above the 100, and then it pushes on back up again. So reward to risk. When we first start out, you're always better to go for 1-to-1, just to start to get a feel of the trading system. Because at first, all you want to do really is practice using the system. A lot of people go straight away and just, right, I know how to trade it, or I've got rules for this system. Now I need to go and make money. That's not how it works. You need to practice first. You need to make sure that you can actually trade the system correctly live, because most of the reason why people aren't making money is because they're making mistakes. So what you need to do is to make sure that you're not making mistakes. The only way you can do that is, 1, you've got to have rules, and 2, you've got to follow them religiously. So hence why the rest of the week is going to be about the back testing, checklists, and the journal, because there is what going to keep you disciplined, keep you on track, and make sure that you are doing the right thing. So also this system, we're going to trade it on the 30 minutes charts, and it can be traded 24 hours a day. So that means it doesn't matter what time zone you're in. It doesn't matter what times you can look at the charts. What we're going to do is, with this system, you can, if you can only do in America between, you finish work at 6, so you maybe have 6 to 8 that you can do trading, where you can sit down between 6 to 8, look on the 30 minutes charts, and see if you can find an entry for this. So this is our rules for a long. So for buy signals, price must create an inverse head and shoulders. This is your inverse head and shoulder here. You've got the left shoulder, your head, then the right shoulder, which basically means is this is the retracement, and it's making a lower high, a higher low, but it's a lower high. Now we made a lower low and a lower high. But what we're looking for is this lower high here and to take the trade. So the entry is going to be above the high and the stop loss is going to be below the low. Now what it actually uses is 5 phases. So there's 5 things we're looking for as part of our rules. So number one is the start of the pattern. It forms remember this is on an uptrend. This is for us taking a long. So it starts by forming the high at number 1, and then it forms a higher low at number 2, and number 2 must be lower than number 1. Then number 3, and this is a lower high, so it must be higher than number 2, but it's also got to be lower than number 1. Then number 4, obviously number 4 is your head, so it's got to be lower than number 2, and it's got to be lower than number 3. Then number 5 doesn't have to be lower than number 3, but it must be higher than number 4. So if it does break the high there, it's still a head and shoulders pattern, and then we can still take the entry. All it's going to mean is you're going to have a bigger risk. That's all. So number 5 doesn't have to be lower than number 3. It just has to be higher than number 4. Number 6 is your anticipation. As soon as the price starts coming down here, we're not looking for this low. We're anticipating that this low is going to be higher than number 4, and obviously it's going to be lower than number 5, and then it's going to take off. So once you see 5 formed, so it's basically going to be 2 candles to give you that high. Highs are 2 to the left, 2 to the right. So once you've been given that high, we then put the entry above the high there and your stop loss below the low. So entry is going to be 3 pips above number 5. Stop loss is going to be 10 pips below number 4. And your target is always going to be 1 to 1. And expiry is after 12 hours. So you can either sit around and wait for the 12 hours. Hi Kevin Jones, nice of you to join us. So the expiry is after 12 hours. So you can either set that up on your MT4, when you're placing the pending order, or, just as you're watching the charts, as you're watching things progress. If nothing happens after 12 hours, it tends to mean it's not going to happen. So just cancel the pending order. Remember, these are going to be pending orders. So the same again, when we're going short, you've got your 50 below your 100. So that tells you that you're in a downtrend. So it's fine to take the short. And again, we're looking for the head and shoulders. For sell signals must create an inverse head and shoulders pattern in a downtrend. So we're in a downtrend because our EMAs have told us we're in a downtrend. And then we're looking for it to make a lower high, obviously, because the high is up here. And then we want a higher low. And then that's when we know we're starting in a retracement and we're looking to get back in. So this is us, right, this is signaling us to start watching, to see if it gives us the 5 phases that we're going to use to get into the sell. And those 5 phases are, obviously 50 must be below the 100 because we're looking for a downtrend, and the 50 below the 100 is telling us we're in a downtrend. Number 1 is the start of the pattern. So we've just come from a high, we've come down, and then you get your 2 candles, and that tells you, right, now we've got a low. So what we're looking for now is it makes our lower high, it comes down, and then it makes another low, and it makes a higher low. So we've got number 1 is the start of the pattern. Number 2 has got to be higher than number 1. And then number 3 has got to be lower than number 2, but higher than number 1, because we're starting to make higher lows. Number 4 has got to be higher than 2 and 3, because this is your head on the head and shoulders pattern. Then number 5 has got to be lower than number 4. Doesn't have to be higher than 3. It can be the same. It can be a little bit lower. It's very nice if it is a higher low. And it's got to be lower than number 4. And then number 6, we want it to be higher than 5 and lower than 4, but obviously this is our anticipation. When this low is formed, i.e. we get the 2 candles to the right, so that we actually get given the low signal, then that's when we place our entry in 3 pips below number 5, which is the low here, and then you put your stop loss 10 pips above 4, which is your high here. And again, our target is 1 to 1, and we do an expiry of 12 hours. Again, if it hasn't gone within 12 hours, it normally means it's not going to. So you can either set that up on the NT4, or you can, sit and watch the trade. And I don't mean sit and watch the trade permanently for 12 hours. You can have a look and see, right, I'll come back in a couple of hours time to see if it's moved. Come back in a couple of hours time to see if it's moved. That's all you need to do. You can quite easily just leave it and, come back in 12 hours. Right, did it go? Did it not? You don't have to babysit this. This is a good thing with pending orders. And if it takes out the high here, so in other words, if price takes out your stop loss before coming down, cancel the pending order, because it may go again and give you a 6, 7, and then a lead. The reason this is good is it's 1, 2, 3, 4, 5. If anyone's done anything to do with Elliott waves, 5 waves is pretty much a good signal. So that's why we do the head and shoulders pattern. Right, so let's go and have a look on the charts and see what we can find. So just drawn simply on here, and I've done this again. I've not looked for perfect, beautiful examples because they're not the ones you're going to find. Obviously, that would be lovely if it was, but they're not. You've got to think outside the box and view this as it's happening. Now we are in a downtrend. The 50 is below the 100, so we're looking for sells. We've had quite a good push down, and then price moves up, and it gives us a high above these highs here, and then a higher low. So that's our signal to start looking. That's our left shoulder. Then it's given us the number 4, our next high, comes down pretty much to the same level, and then goes back up. So that's our 5. So as soon as this, you've got 1, 2 candles that are forming this low, it's time to put in your pending order. You put your entry in 3 pips below the low, and your stop loss 10 pips above the high, and you're looking for a 1 to 1. So you've got 80 pips there, and then 80 pips there. So we easily get the 1 to 1. Now it takes a little while to get started. Now remember, this is 30-minute candles. So we're looking at 30 odd bars at 30 minutes. So that might be over the 12 hours. So that might not have, that's maybe not a good example. Silly kind, but it's still valid. And then we're in an uptrend. So we got the 50 above the 100. Obviously, you can take this as one big move going up here. It forms the high, and then we're looking for the pattern to form. So we get a higher low, which is what you expect in an uptrend, but then we get this lower high. Okay, so now our pattern might be starting to form. So we've got our left shoulder. So then we look for our head, and our head gets formed, and then obviously we're looking for the right shoulder. Again, the market comes down, gives us our high, so we put our entry in 3 pips above the high and 10 pips below the low. Market takes us in and gives us our reward. So we've basically come up with a set of rules now, and we've taken it to the market very quickly, very basically, and said, yes, right, this does work. Now, can I trade this live is the next question. So that's obviously where you've got to go to the back testing, because we've got to go and see, we've only just quickly looked on the market. We found 2 that work, but what happens if there's, lots of signals that, are false and don't don't give us our win. So what you need to do then is back test. And that's pretty much what well, it's not pretty much, that is what we're going to be doing tomorrow. Just going to grab a sip of water while the mouth's gone very dry very quickly. Right. So basically what we've done now is we've created a set of rules. And what we're going to do is we're going to take them to the market in back testing, which means we're going to go back in time. Back in time and see if we can find this scenario happening time and time again. And what we do is we play them out. In back testing, we actually say, we know, right, this will be our entry, this will be our stop loss, and then we take the trade. You know, obviously on this one, 1, 2, 3, 4, 5, and 6. So your entry would be down there, stop loss would be there, and then you play it out. Doesn't get you 1-to-1, then comes back. If you stay in, it does eventually get to the 1-to-1. But this is all stuff we need to know and find out. So that's going to be back testing. And that's what we're going to look at tomorrow. Hello, Sharon. You've joined me just as I'm finishing up. So what we've done today, we've covered our rules. We've designed them. Let me go back quickly. So we're using the patterns in cyclicity to produce trading signals. And then what we're doing is the head and shoulders. Now the trend tracer is the trend-based system. We're using the 50 and the 100s as filters to tell us if we're in an uptrend or in a downtrend. The risk to reward is always going to be 1-to-1. And we're going to trade it on the 30 minutes charts. And we know that we can trade it 24 hours a day. So the rules are, for the long, the 50's got to be above the 100. Our 1's the start and the pattern. And then 2's got to be lower than 1. And then, so the lower, when this forms the low, it's got to be lower than 1. When this forms the high, it's got to be higher than 2 but lower than 1. When we form the low at 4, which is your head, it's got to be lower than 2 and 3. 5 doesn't have to be lower than 3. It can be there or a little bit above. But it's got to be higher than 4. And then we put our entry in 3 pips above 5 and our stop loss 10 pips below 4. And that is our long rules. Our management, obviously our equity management, is going to be decided after we've done the back testing. All we're doing at the moment is coming up with a set of rules to get us into the market. And then when we do the back testing, that's then going to show us how we need to equity manage it. Okay? And that's going to be tomorrow. I'll just quickly show you again the rules for the short. Don't know if you want to take a picture or a screenshot. 50 below the 100, obviously, because that's telling us then we're in a downtrend. 1 is the start of the pattern. And now 2 is the high, which is going to be the dip before, you know, that's going to be your left shoulder. So that's got to be higher than number 1. 3 is going to be lower than number 2, but higher than number 1. 4 is the head, and that's going to be higher than number 2 and number 3. And then 5, just got to be lower than 4. It doesn't have to be higher than 3. It can be evens or just a little bit under. And it's basically when this leg starts to come back up to form the right shoulder, you're anticipating the right shoulder. That's why we're putting the entry in and the stop loss in here. We're anticipating that the market's going to turn and it's going to come down. So we need to be looking at the entry 3 pips below and the stop loss is 10 pips above. I am a complete novice, not currently trading, but your insight is very valuable to me and I look to applying it in the future. Yes, you can be a complete novice and maybe you're thinking, well, what's he talking about? Highs, lows. Again, if we look at the chart, some people, a lot of traders out there, when they're teaching people, they try and teach you everything. And to me, that's just overwhelmed. At the moment, it's not, we don't need to go over technical. That's a low, that's a high, that's a low, that's a high. And then that's a low, that's a high, that's a low, that's a high, that's a low, that's a high. It's simple as that. That's what we're talking about with highs and lows. Is the market trending down or trending up? Well, let's just let the moving averages tell us that. Do we need to know what's going on in the financial world between the Australian dollar and the US dollar? Not in this system. No, it's purely technical. I'm not worried what's going on in Australia. Their dollar could crash tomorrow. Doesn't matter. If I'm selling the Aussie dollar, then I'm going to make money. If I'm not, then my trade's going to get stopped out, and that's part of the system. But what you'll see is when we're backtesting it, we don't know what the conditions are when we're backtesting, because we're just going through historical data. If it works through historical data, it's not definite, but there's a good chance that it may work going forward. And we don't know when the news is being hit and everything else when we're doing the back testing. So therefore, the news and that going forward, it's not going to work. Some of them, some news is going to take us out and lose us money, and some news is going to take us on and make us money. It will work itself out. But as a system, this is purely technical. And if you're starting out, this is definitely the way to go. You don't want to be starting out trying to learn to be a discretionary trader. And if you don't know what that is, feel free to Google it. But that's something you need to progress into, and that's something you'll decide later on. But for now, as a newbie, this is the perfect thing to get into. Just get a system like this and just do it. Don't need to know why it works, how it works. All you want to do is just see it working, and then that's a step closer to being a trader. So that'll be our next thing. Tomorrow we're going to look at back testing. So I hope you've enjoyed it today. It may have confused a few of you if you are complete newbies, but just come in, because you'll get a lot, especially coming tomorrow, because you'll get a lot from the back testing. That will certainly show you. I'm going to be going through the charts, showing you everything you need to know about the charts and how we're back testing. And as we're going along, you'll pick up little things, you'll pick up little nuances, and you'll start to understand a bit more about the charts and what it is we're looking for and how it is that we make money doing it. So so thanks very much for joining today. I hope it's been a little bit insightful. If you've enjoyed it, please give us a thumbs up, give us a like. It's nice to know that people are enjoying what you're doing, and also the Facebook algorithm. The more engagement I get, the more people I can help, because Facebook will itself will give it to other people. So if you can just make sure your like button's working, maybe just keep tapping it for a few seconds now, just to check. I just want to check, see if it's working. But if you can do that, that will really help me out, and you're helping other people, because if you have enjoyed it and you might have learned something, or you might have gained something, then if we can get it out to more people, then more people can get something. So basically, this is the rules we're going to cover. Tomorrow we're going to do the back testing. Wednesday, trying to work out what day it is, because obviously some of you are in America, so you're a day behind me. And me now, this is Tuesday morning. This will be your Monday evening. So your Wednesday, we'll then be doing routines and checklists. And that sounds pretty boring and mundane, but believe me, that's the cornerstone of being organised and being disciplined. And that's some of the hardest things that traders find. They always want to be organised and disciplined when they've got a system that works. Doesn't work that way. You've got to get organised and disciplined first, and then you'll find the system that works. So although it may sound mundane and boring, it's probably one of the most important sessions there is. So you've got to keep that in mind. And then Thursday we'll be going on and looking at the journal, and that's it's nothing complicated. It's just pretty much, I keep saying pretty much, it's not, it is you're detailing the trades as you take them, and you're also detailing, what I get you to do is take screenshots and some other notes as well. And the reason I do that is, as you're going along, you'll start to see things, you'll start to see patterns or something that resonates with you, and you're like, well, if I do that, it gets me out of a couple of those losing trades. Well, if you're trading at 1% and you get yourself out of, say, two trades that have lost because you've spotted something, that saving of 2% is just, that can make the difference between you having a profitable month and a losing month. That's the bonuses of the journal. So that's what we're going to be covering on Thursday. And then Friday, it's going to be a Q&A. Anything that we've done during the week, you feel free to pop on live, throw me some questions, and I'm happy to answer anything. If there's some of you that can't make it, maybe you're watching this on the replay, feel free to email them to me if you have any questions, or just go onto the Facebook Special Effects Academy, pop questions on there, or if you're friends of mine, just put it on the Facebook Messenger. I'm happy to answer any questions. I'll just quickly stick my email address. You have to excuse me, my keyboard likes to confuse me by chucking it into type every now and again, and trying to speak and type at the same time. Okay, all right. So there's my email address if anyone wants to, for Friday, if there's something on a replay or anything and you can't make the live session and you want to ask me a question, just pop it in there and I'll answer it on the Friday in the live session. So I might not have time to get back to everyone who writes me a question, because I want to do it in the live session, because if you've got a question, it normally means other people are thinking the same thing. So it's better for me to answer those questions live so that everyone can benefit. Any question is a great question. Do not think questions are stupid. If you don't want me to mention your name on the question, just put that in, when you request. But believe me, there's no such thing as a stupid question, because if you've got that question, I'll guarantee that somebody else has too, and they'll be so pleased that you had the courage to ask that question for them. So it doesn't matter what that question is. If you have something that's niggling you and you want answered, Friday's your day. Or even as we're going along, chuck in a comment. If there's something I've said that you'd like me to go back to, you guys that are here, turn up live, you ask questions as you're here and I'll answer them. But if there's anything we've missed at the end, if there's anything, maybe the third video will give you a question that you need to ask or whatever based on the first. So, Friday will be a Q&A. And I've rattled on for long enough now, taken up a lot of your special, precious time. Thank you so much for joining me, and I hope to see you all again tomorrow. So 6 p.m. Eastern Standard Time, we will be going live again, hopefully with no technical issues this time. Remember, the like button, it's the one with the thumb. If just test your finger, see if it works. Kevin, Sharon, Andres, come on, you guys. I know you've got a like button there somewhere. I haven't sent you to sleep, have I? Wake up. Right, thank you very much, and I'll see you on the next one.